So question number 5, it's an advanced financial reporting and analysis question, which was done in December 2022. Then we are here. So they want us, ladies and gentlemen, this question number 5, they want us to prepare a statement of cash flows for Malum Limited for the year ended 30th April 2022 using the indirect method in accordance with International Accounting Standard number 7, which is statement of what year? Cash flows. So, ladies and gentlemen, once you give me this kind of a question, even without reading anywhere, what I will do here very fast, I know I will always start this kind of a problem, this kind of a question, from which profit? Is there somebody who can remind us which profit am I supposed to start with? Or rather, remember, cash flow statement, we have got 3 types of cash flows. We have what we call the operating, cash flows. And this is the component that we shall start with. And the operating cash flows, remember, we must start with the profit before tax. Profit before tax. We have here profit before who? Profit before tax. And then once you write here profit before tax, you'll simply come down here and write adjusted for. And how do we make the adjustments? Remember the adjustments, ladies and gentlemen, we normally use the acronym DIAL, God's number for food. Dial God's number for food, or else you rest in peace. Is anybody who remembers this acronym? You dial God's number for food, or else you rest in peace. So you start with profit before tax, and then once you have this, we have adjustments that we must make. And these adjustments, you normally cram this thing like this. You dial God's number for food, or you rest in peace. If you remember down here, we're supposed to have what we call working capital changes. We're supposed to have here working capital changes. And if you remember, this D, the first D, is for depreciation. This I is for impairment. Impairment of what here, somebody? Impairment of goodwill. Then we have this A for amortization. We have in this case here, this L for loss on disposal of assets. Then in this case here, we come to this G. This is gain on disposal. We have here gain on disposal of assets. And then we have this F. This F stands for finance cost. So we have the finance cost. And then we have our working capital. What do we have here, ladies and gentlemen? So for working capital, we know we have 3 components. The first one is the receivables. The second one is the inventory. The third one is the payables like that. And then remember, as you copy this down, you must be very, you have to be leaving some space in between. Because at the end of the day, you may be required here to do what here? To add a few items here and there. So I would want to know whether we are together up to here, whether you guys have been able to copy this thing. Control B for bolding this. Profit before tax is very important. Control B like that. So are we together? Thank you very much. And if I'm the one doing this, I will not stop there. I know that these are operating cash flows. These operating cash flows basically are the first component, which is my A. I will come down here and write B. I have B. B, the second type of cash flows, is what we call investing cash flows. Investing cash flows, investing cash flows, investing cash flows. And then we have, of course, this I don't have to leave like huge space. No, I'll come somewhere here and mention, for example, C, I have what we call the financing cash flows. So we have here the financing cash flows. So financing cash flows, financing cash flows. Now, ladies and gentlemen, even if you're doing BDA, or even if you're doing your FRA, financial reporting and analysis, never ever should you think about having a question balancing. If you go for balancing, you'll always keep on repeating these papers until you will start blaming your village witchcraft, or rather witches. You start to say that there are people at home who do not want me to succeed in Nairobi or wherever, you see. And yet you're the one who has not mastered the concept of time management is important, is the most important skill that you need for you to be able to tackle a CASNEB paper, time management. Like this kind of a question, I should be able to post as many entries as I can within 38 minutes. Within 38 minutes. Within 38 minutes. Within 38 minutes. So great. So then, ladies and gentlemen, what we have here, yeah, everybody is welcome. Don't chase anybody. We're here to gather knowledge. Everybody, even my friends, they're also welcome here. Great. Benchmarking, yeah, it's allowed. Yeah, it's allowed. Benchmarking is allowed. Is allowed. Thank you. So we come, ladies and gentlemen, here. We come, ladies and gentlemen, here. Great. So we read the question then. So we shall come here and read the question. So the question is here with me. The question is here with me. The question is here with me. This is the question. So the very first thing that I will do is to look for profit before tax. So profit before tax, of course, in any cash flow statement of financial positions, they must give us two of them. They must give us two of them for 2 years. So we have 2021, we have 2022 like that. 2021 and 2022 like that. And then for income statement, they'll only give us for 1 year, for the most current year. So we have the most current year is 30th April 2022 like this. And in this one, ladies and gentlemen, I should be able to pick the profit before tax. So in this question, is there somebody who is able to see the profit before tax? 8190, isn't it? 8190. So this is what I'll come and put in my Excel. Profit before tax here, I have shillings, thousands. So we have here 8190. 8190. 8190. And then now we go for the adjustments. The first one is the depreciation. I'll be able to go straight away to my notes to the account, and then I look for any depreciation amount given. Like now in note number 1, what have they told us in note number 1? Malum Limited acquired some new plant during the year to 30th April 2020 at a cost of 1,800 from a finance company. An arrangement was made at the date of acquisition for the liability for the plant to be settled by Malum Limited, issuing at par a 10% loan note dated 2025 to the finance company. The value by which the loan note exceeded the liability for the plant was received from the finance company in cash. Note number 2, the company's motor vehicle haulage fleet with a cost of 2630,000 and accumulated depreciation of shillings 1165,000 was disposed of during the year for cash proceeds of shillings 1810. The profit on disposal has been included in other operating expenses. If I'm the one, ladies and gentlemen, I will be able to calculate these profits or loss on disposal right away. Note number 2, I have to finish with note number 2. I have to finish with note number 2. And note number 2 will give me 2 marks. So I would want to see whether there is any student who will be able to give me the profit or loss upon disposal of these assets. Remember that these assets, you can see the cost of these assets that were disposed was 2630 in thousands. And they had an accumulated depreciation of how much? Of 1165. Of 1165. So then if I'm the one doing this, I will come, ladies and gentlemen, here and calculate this. You know, I'll be able to get what we call net book value. I'll be able to get what we call the net book value. So is there somebody who is able to give me this net book value very first? Anybody who is able to give me this net book value very first? So we have a net book value. So the net book value here, of course, will be cost, the cost minus what here? Somebody minus any accumulated what here? Any accumulated depreciation. So my net book value, ladies and gentlemen, these guys have given me a cost of 26, a cost of 2630, and then of course I can see accumulated depreciation is 1165. So I'm able to see NBV of 1465. So the net book value is 1465. This is the value of this investment as at today. But how much revenue did it generate? How much revenue did it generate? So if you look at the revenue or the proceeds, we have here the proceeds, the revenue, proceeds in this case here, or revenue, ladies and gentlemen, if I look at this, they have given me a figure. They have told me, if you look at this question here, they have told me the company's motor vehicle haulage fleet with a cost of 2130,000 and accumulated depreciation of 1165 was disposed of during the year for cash proceeds of 1810. So in this case, ladies and gentlemen, if the cash proceeds are 1810, if cash proceeds here are 1810, so in this case here we made a profit. So we have a profit on disposal. So we have a profit on disposal. We have a profit on disposal. So the profit on disposal here will be equal to, so automatically I will take in this case here the revenue we generated minus the NBV, which in this case here gives me what here, somewhat 345. So where you have the gain on disposal of assets, you will come and write here minus 345. Ladies and gentlemen, this is a gain. This gain is already in this profit before tax. When they were computing a profit before tax, all gains were added. And what am I doing at the moment? I'm trying to make good. I'm trying to adjust. So to take this, ladies and gentlemen, to the normal position, then I need to come and do what here? I need to come and subtract. Whenever I have a gain on disposal, then I don't have any loss on disposal. No loss on disposal. But remember, ladies and gentlemen, anytime you are told that an asset was disposed, two things. I'll always look for gain, stroke loss on disposal, and then there is a free mark that I'm going to get. The amount in terms of proceeds that you received from the sale, this amount is going to be captured under investing activities. Because you see, investing activities, basically we're looking at the movement in assets. So here we sold an asset. So it means, ladies and gentlemen, we reduced our asset base, but there is a very important asset that came on board, which is what here? Money. So here I will straight away come here under investing activities without wasting any time. I'll straight away come here and talk of proceeds. Proceeds on the sale of assets here. Sale of assets, how much proceeds do we get? Somebody who is able to recall very first. How much proceeds do we get on the sale of these assets? We got 1810. Remember, our figures are in thousands. We got 1810 like that. Great. So then, ladies and gentlemen, once I do that, I will come here and continue with my question very, very comfortably. Look at note number 2 is over. I've been able to get the gain on disposal, and I've been able to capture the cash proceeds from the sale of these assets, which fall under investment. I've been able to capture these under investing activities. Look at note number 3. Depreciation charged on PPE during the year was 5490 and was included in the cost of sales. So this 5490 is depreciation. Already I have a place to put this 5490. I have this line, depreciation 5490. 54, 54, 90. I have this 5490 like that. All right, so 5490 depreciation. So then, ladies and gentlemen, from there, you come and continue nicely. We go to note number 3, depreciation. No, note number 4. Intangible assets were amortized during the year, and the amortization charge to profit or loss amounted to 540. I've never understood why students fail in some of these things. This is a straightforward thing. Already you have amortization of intangible assets. So you'll come here under amortization of intangible assets, and then you put what here? You put 540. 540 is the intangible assets that were amortized here, 540. But again, remember that the figures that I have here, ladies and gentlemen, for the two items, that is depreciation and amortization, will be positive. Why am I taking this as positive? Remember, you are making adjustments. When I was getting these profits like depreciation, I must have subtracted. Amortization, I must have subtracted. So during the adjustment stage, then I will need to add back. I'm adding back. Remember, any expenses in these adjustments, you add back. Any gains here, you deduct. Any gains, you deduct. So first of all, I would want to know whether at least we are together. I would want to know whether we are together so far. Are we together? Thank you very much. So we are doing very well. So we continue. So there is a gentleman. I'll come here and continue your intangible assets that already I've dealt with. Note number 5. During the year ended 30th April 2022, Malum Limited made a bonus issue of ordinary shares of 1 new share for every 10 shares held, utilizing the share premium accounting. Remember, under financing activities, we normally look at the shares. We normally look at any liabilities, etc. So we are doing very, very well. Ladies and gentlemen, please listen. And I would want to come here and go back here. Now, this question is not a question that has got anything to do with group accounts. You've not seen us talk about existence of a subsidiary. There is no subsidiary here, ladies and gentlemen. So if there is no subsidiary, then we cannot be talking of goodwill. Remember, this impairment is impairment of goodwill. So impairment, I don't expect to get anything. And a loss on disposal of assets, nothing. So now I'm looking for the interest charged in the income statement. I need to come and add this back. Where am I adding this back? Remember, finance cost, ladies and gentlemen, in the new way, IS 7, finance cost is not supposed to be in operating activities. Finance cost cannot be in operating activities. We had debt holders who gave us their money, and we are returning interest. So in this case here, that automatically should be taken under what here? That should be taken under our financing activities, not here. So here I need to come and add it back. I cancel the finance cost that had been taken up here. So we have this finance cost. Let's look for it slowly. We are looking for it slowly. So we have our finance cost, ladies and gentlemen, here, 705. 705. So finance cost is 705. So this 705, you can see there they are deducting, but now here, because we are looking for the cancellation effect, we shall add. Now, ladies and gentlemen, from there, now we shall be able to do the abracadabra thing. Before you go to any other stuff, you must do what we call an abracadabra thing. What is this abracadabra? This thing of always looking up in the heavens. That where you have profit before tax here, 8190, that you go up column-wise and identify non-operational items. We identify non-operational items. And in these non-operational items, if you are careful, like now finance cost, of course, is non-operational. I've been able to capture that other expense, that is okay. But when I look up, look at this thing, other operating, they're calling it operating income, but you and I appreciate the fact that government grant, when the government gives you money for some project, ladies and gentlemen, that money it has given you which is given to you with a lot of conditions. It doesn't matter whether you'll be able to meet the conditions. At the end of the day, what you're supposed to know is that government grant is never an operational. Operational is what we get out of selling, out of doing business. So then here I've been able to encounter a non-operational item. So I will come here right away. I can see there is a non-operational item called government grant. So I'll be able to come here to my Excel, and then of course I'll need to create like a new row. It's very easy to create a new row. So what I'll do, I'll come and highlight these working capital changes because I would want a new row on top. I will come and say Control Shift, I add, Control Shift, and then I press equals. I create, in this case here, a new row like that. Once I'm here, I've been able to see what they're calling government grant. So this is a government grant, which I would need to cancel. So government grant that I would need to cancel. So in this case here, the figure is 750. The figure is 750. The figure is 750. The question is, will it be subtracted here or will it be added? Will it be subtracted or shall it be added? You subtract, yes. You subtract, yes. Ladies and gentlemen, why are we subtracting? Because you can see in the other fora, it was done what here? It was added. It was an income. So now here we need to come and do what here? We need to come and subtract. We need to come and subtract. From there we go to the working capital what here? From there we shall go straight away to the working capital, changes. So working capital changes, we are looking at what we've called rest in peace. So we start with receivables. So remember, for receivables, we normally talk of what, if you recall, for receivables, ladies and gentlemen, for receivables, why do you think government didn't give cash there? We're not saying that it never gave cash. It gave cash, but the cash does not belong in operations. I have to cancel it here. It gave, yes, but I have to cancel it from operations because remember, operations, we are only looking at things that are associated with what here? Buying and selling. We are looking at revenue. We are looking at, ladies and gentlemen, cost of sales. We are looking at operational expenses. If somebody comes in with a donation, he gives you some donation there, then you can't capture that under operations. You will capture it somewhere else. All right. So in this case here, we have receivables. Receivables, remember, we normally talk about opening minus closing. So opening minus closing. So in this case here, is there somebody who can go to the balance sheet and look for the opening? Just go to the balance sheet and look for the opening. So balance sheet, opening, balance sheet, go to the receivables, balance sheet, receivables, balance sheet. I hope you're able to see the trade receivables. Remember, they have organized this thing like this. 2021 is the first year. It is the opening. This is the closing balance. So in this case here, we have for receivables, it is 7080 minus 9230. 7080 minus 9230. So it is 7080 minus 9230. Opening minus closing. Opening minus closing. So come here to your Excel, and then you talk of opening, which is 7080. So I have to say equals, of course. 7080 minus 7080 minus 92 minus 92, 30 like that. And then I say enter. So I'm getting here minus 2150. The moment I do opening minus closing, ladies and gentlemen, the moment I do opening minus closing, I don't have to start worrying like, did receivables increase? That's none of my business. This thing will do a self-adjustment. Like now it has given me minus 2150, meaning it's a cash outflow. The same case with inventory. So inventory again, I will come here and talk of what here? Opening minus closing. So here I'll come and talk of opening minus closing. So look for inventory. So this inventory that I can see here, ladies and gentlemen, in inventory, I can see the opening here is 11,445 minus, for inventory, remember, minus 13,300. So 11,445 minus 13,300. 11,445 minus 13,300. So I'll come back here. I've already crammed these. So we are saying here equals to get started with my Excel. So in this case here equals 11,445. We say minus 13 minus 13 minus 13,300. And then I say enter. I say enter. Then I go to payables. So payables, ladies and gentlemen, payables, this is a liability. And if it's a liability, we shall always reverse the sign. I shall put a minus there, and then I put bracket. I say opening minus closing. Opening minus closing. So if it's a liability, I'll always put something like that to negate, opposite direction. So I'll come here and say equals. We say minus, ladies and gentlemen. If you come back here to your payables, you'll be able to see your payables. These are normally free marks. These are normally free marks. So the payables, you are able to see the payables and the liabilities. And the liabilities, we are able to see the payables and the liabilities. We have 7,700 minus 10,200. You subtract like that. So you come back here. You come back here. You say open brackets. We have here 7,700. 7,700. We say minus 10,200. Minus 10,200. Minus 10,200, like that. Minus 10,200, you close brackets like that. Great, great. And then you say enter. You can see now this is self-adjusting. I'll not be making those crazy things where I'm making an argument like this one, oh, it's 7770. 7770. Thank you very much, Joe. It's 7770. I'm being told it's 7770. It is 7770. 7770. 7770, you're right. So then come back here, ladies and gentlemen. Come back here, ladies and gentlemen. This is the beautiful thing with working with Excel. Beautiful thing with working with Excel. All right. So we have, ladies and gentlemen, here. So it's 7770, you're right. So then I'll come here. I'll come here where I have my Excel for payables. I'll be able to come and say F2 here to show the formula, isn't it? And then I'll be able to adjust this with 7 there. And then I have, in this case here, my 2430 like that. My 2430 like that. So first of all, up to here, are we together? Are we together up to here? Are we together up to here? Are we together up to here? Great. So then I would want to pose a question. I would want to pose a question to. So I will talk about, in this case here, investing activities. And the investing activities, remember, we are basically looking at our long-term assets and current assets. So we're looking at PPE, we're looking at these intangible assets. And I'm saying here on intangible assets, I can see I began the year with 6150 and I ended the year with 6750. So there's a change in the balance sheet. And then of course, in the income statement, I happen to be having, in this case here, the amortization, note number 4, amortization of 540. So then what I will do, ladies and gentlemen, here, I will come very fast here. When I'm talking about intangible assets, under investing activities, I'll be able to write here intangible assets. So under intangible assets, what am I doing here? I'm basically taking opening minus closing minus any impairment, because impairment is loss, minus any impairment, like that. All right. So in this case, ladies and gentlemen, when I come here, I'm able to see my opening. I'm able to see my opening for the intangible. What am I able to see here? My opening for the first year provided. My opening here for intangible is 6150. So I have 6150 minus 6750 minus the impairment of 540. That's what you book in, the impairment of 540. So I'll come back to my Excel here, say equals. So we have here 6150 minus 67, minus 67, minus 67, minus 6750. And then we have the impairment of 540. So minus 540 like that. And then I should be able to say enter. So I'm getting negative 1140. So I don't have to care whether I procured more intangible assets or I do. No. The moment I follow the right procedure, that logic of making so many arguments is lost. That is the proper answer that I have here. That is the proper answer that I have here. Now, ladies and gentlemen, I would wish us to go slowly here. So in terms of intangible assets, I can see I took opening minus closing minus impairment. Great. So then there is something else under these investing activities I would want us to do. I would want us, ladies and gentlemen, to do this heavy working of property, plant, and equipment. PPE, property, plant, and equipment. This is quite a nice one. Property, plant, and equipment. What shall we do to be able to get property, plant, and equipment? This is very easy. What I'll do, I'll come and take, of course, opening, minus closing as usual. Opening minus closing as usual. Now, in this case here, what may have affected my PPE? I know that in the year, we had some new acquisitions. What else in this case, ladies and gentlemen, happened to affect my PPE? I must have had some disposals. So disposals reduce. Ladies and gentlemen, depreciation reduces this thing. All right. We have, ladies and gentlemen, revaluation. Like if it's a revaluation gain, so we have here revaluation gain, gain, like that. So remember, for PPE, take opening minus closing, and then look at your movements now in the PPE. Opening minus closing, these were affected by, of course, acquisitions must increase, disposals down, any depreciation reduction. If we have a revaluation gain, you add. So please come to this column here. We move together. So is there anybody who is able to see the balance that was brought down? Opening balance for PPE. You guys are now not talking to me at all, and I'm almost finishing this question. So is there anybody who is able to see the balance? So I can see 27. I can see 27 here. 27, 450 minus 36, 300. Minus 36, 300. Thank you so much. So I want us to go slowly here. Somebody, I'm following this. Do we have any acquisitions in the year? Let's go to the notes of the accounts here. We can see here Malum Limited acquired some new plant during the year at a cost of it, so plus 1,800. These were acquisitions. All right. And then you are following this thing here. Other than acquisitions, what else? Do we have any disposal? So come here, under disposals, yes, we disposed the company's motor vehicle haulage fleet with a cost of 2630, and the accumulated depreciation of 1160 was disposed. So remember, we subtract the net book value of the asset that was sold. Net book value, already you had obtained net book value here. Remember, to get the net book value, what do? We take the cost minus accumulated depreciation. Don't give me the profit on disposal. I simply want the net book value. Profit cannot go to PPE. So the net book value is 2630 minus 1165, which is 1465. Now go back, ladies and gentlemen, to our question here, or rather to our Excel, for you to be able to see what we have. So we have depreciation, and do we have any revaluation gain? Let's see revaluation gain. Do we have any revaluation gain? Is there anybody who is able to see a revaluation gain that may have affected? If you look around, we have here gain on property revaluation. Are you able to see this gain on property? These guys are not seeing this thing. Gain on property revaluation. We have 25 what here? Gain on property revaluation, 2550. So this one here, you will come, and because it's a gain, you add. So you say plus 2550, like that. So please now go to your write-up and write these very first. So you'll come here and say equals, then we have 27,450 minus the closing of 36,300, you say plus the new acquisitions, which are worth 1,800, and then you say minus the NBV of the asset that was disposed, 1465, and then you say plus the revaluation gain of 25, 50, 2550. And then of course you say equals. So when you say equals, what are we able to get there? What you are able to get, ladies and gentlemen, when we say equals, is a figure of what here, somebody. When we say equals, we are getting 59, something, 59, 65 years. So meaning that, ladies and gentlemen, don't even worry about like what, no. That is it. That is it. You'll be able to confirm later. So still, this is financing activities. I've got one more stuff. I'll come here on top of 22. I'll say shift, add a row. So we still have some help we got from the government. So we have, in this case here, the government grant. They helped us to invest. Government grant. They helped us to invest. Government grant. Government grant. So for government grant, like for example, if I'm the one doing this kind of a question and exam, I may not even be able to do this thing at all because it may waste my time. But because you're doing it here for purpose of understanding, it will be good for me to come and capture it. But of course, for an exam, it will become quite heavy. Great. NBV, remember it is NBV. We are subtracting this NBV of 1465 because it's an asset that was sold. An asset that was sold. Okay. An asset that was sold. Click on the formula of, okay, click on the formula. Okay. Just 1 minute. Click on this formula. I can even make it F2 for you to see it very well. So we have opening minus closing plus acquisitions in the year minus the asset that was disposed. All right. Minus, oh, have we left out depreciation? Is there something we have left out? Is there something we have left out? Because I can see there are 1, 2, 3, 4, 5, 6. 1, 2, 3, 4. We have left out one item. What have we left out? 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 Depreciation, eh? We have depreciation. Thank you very much. We have depreciation. We have depreciation that has been left out here. So we have depreciation that has been left out here. Depreciation that has been left out here. Depreciation in the year, we are told depreciation in the year was 5490. Sorry for that. Depreciation in the year was 5490. Depreciation for the year was 5490. So minus 5490. Minus 5490. And then now you say enter. Enter. So are we together now up to here? Are we together then? Are we together? 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 So after we finish this government grant, then I should be able to give you a break. But we need to do this government grant. So government grant, what do we have for government grant? I love this. This is so easy. These are walk in the park. These are walk in the park. So government grant, first of all, I should give you some story about government grants. So remember government grants, these are basically donations that you are given by government, but they normally come with so many attached conditions. If you don't meet those conditions, you must return the government's money back. And that is why government grants, not unless you meet all conditions, normally government grants are accounted for in the balance sheet statement of financial position. You always see them under non-current liabilities or current liabilities, because they only convert and become yours if in this case here you have met all conditions, and they are very hard to meet them. They're very hard to meet them. So you'll have to keep on putting them there, and then you release them gradually to your investment activities slowly. So then how do we get these government grants? Very easy. To get the government grants, what I'll do, ladies and gentlemen, I'll come here. I will come here. So government grants, I'll come here. So first of all, I'll go to the changes in the balance sheet. So I can see here, I've got government grants under non-current liabilities. and also under current liabilities. Not a problem at all. This is an easy thing. What I'll do, I'll come here in my government grants. I'll come here in my government grants. I'll write down the formula. So we have equals. I have to say minus because this is a liability. So I open brackets. I'll say opening minus what here, somebody? Minus closing. Opening minus closing. Opening minus closing. Plus any government, any grant, plus any grant given in the year. Given in the year. So basically, we are looking at what here, the P and L item. We are looking at the P and L item. We're looking at the P and L item. You're looking at the P and L item given in the year. So ladies and gentlemen, then what do we have here? Let's try to work this thing out. So I'll come and say equals. Why am I putting a negative outside? Because government grants have been accounted under liabilities. So then I'll come here and say open brackets. So then we look for these opening values for government grant. So for government grant, the opening values are the two of them. You add them up. So for government grants, I will take opening for 2021 is 810. I say that's non-current liability, non-current government grant. And then the current government grant down there is 600. That's opening. Minus closing. So closing, what do I have, ladies and gentlemen? Closing is for this year. So closing, I can see the non-government grant closing. Non-government grant closing there is 3150. All right. Plus what here, somebody? Plus 810. Plus 810. Plus 810. All right. So you consolidate those. You add them up. You add them up. And then now, ladies and gentlemen, you will come and they say plus. Remember, you received some government grant in the year. You received some government grant in the year. How much do you receive in the year as government grant? Let's see. Let's see the government grant you received in the year. You were given some money, government grant in the year. You were given. You remember this other operating income, government grant of 700 what year? Of 750 plus 750 plus 750. So in this case, we are saying, ladies and gentlemen, here, most importantly, that we have 810. 810. We have here plus 600. Plus 600. Those are opening government grants. I'll come and say minus 3150. Minus 3150. Minus 3150. I can even put the other one as minus. I'm subtracting both closing balances to avoid the issues of errors. Minus 810. Minus 810. And then I say plus 750. Plus 750. Plus 750. And then I'll come and close brackets like that. And then I should be able to say what there? Enter. I should be able to say enter. I should be able to say enter. So what do you have there as your government grant? What do you have there as your government grant? Government grant. Government grant. Any government grant. What do we have there under government grant? Abracadabra. Remember, it is 2400. Check here, F2. It is 2400, 810 plus 600 minus 3150 minus 810 minus 810 plus 750 plus 750 plus 750 plus 750 plus 750. Do your workings nicely. Do your workings nicely. Do your working nicely. Do your workings nicely. What are we getting as government grant? It should be 810 opening plus the other opening minus 3110 and then minus not 810 again minus. So in this case, we are subtracting the closings. Remember, we are subtracting the closings. We are subtracting the closings. The closings. So we should start again. We should start again. So then we have what do we have, ladies and gentlemen, here? We should start again. Let's start again. Let's start again. So we have here 810. I took deferred tax, which is wrong. I should have taken here government grant. The first one is 2400 opening plus 600. So 2400 plus 600. Yep. So it is this 24. I took this wrongly. Government grant should be 2400. Government grant should be 2,400. The beginning balance here should be 2,400. How did I get that, really? 2,400. Okay, so they are getting what figure here? They're now getting 210. 2,400 plus 600. Okay, 2,400 plus 600. So, ladies and gentlemen, I would want us to talk about something small here, which is very, very important. Here now, I can come and add a new row, Control Shift. I add a new row here, where I will be able to get here cash flows from investing activities, cash flows from investing activities, cash flows from investing activities. So I need to come here and add this. So I'll come and say Alt equals, I say enter. So I'm getting my cash flows from investing. No, there is a problem. I've done this question. There is a, you're supposed to come to this. And the problem must be in these government grants. So remember, for government grants, let me just say F2 there. What do we do for government grants? So for government grants, if I look at the question paper, government grants, what do we have here for government grants? Government grants, we are here. I think there is a problem here, government grants. So opening balance, 2,400. It's a liability, right? 2,400 plus, in this case here, the opening current, 600, minus, in this case here, the closing values. Closing values, government grant, 3,150, minus the current government grant of 810. And then the government gave us some grant this year. The government gave us some grant this year, which is provided here. I know why we are wrong. I know why we are wrong. We are wrong, ladies and gentlemen, because when the government gave us this 750, it should have reduced our liability. So we are supposed, quite tricky one, we are supposed to say there minus 750, not plus 750. Because you see, the figures we have are the opening balances we have, they are liabilities. So when the government gives us money, then we're supposed to do what? To deduct that 750. Listen, at the beginning of the year, we owed the government. At the beginning of the year, we owed government. This money is here. We owed government 2,400, 600. They are under liabilities. So of course, when we owe them like that, and then the same government in the same year gives us the 750, gives us the 750. So of course, that will go towards reducing what year? Reducing this particular what year liability. Listen and listen to me very well. Remember, when you come and, ladies and gentlemen, recognize a grant in your income statement, it means that you have now been able to fulfill the grant conditions. Now it is your income. And that is why we are saying that you remove this from liability straight away to your income, And that is why, ladies and gentlemen, we are subtracting here. We are subtracting. So if I come back to my Excel, I need to come and say minus here. Minus here. Here, it should be minus like that. And then I should be able to say enter. Yes, it gives me 90, 75 like that. This is 17, 10 like that. Here I would want us to argue a little bit. It's always important to argue a little bit. And you can always master this, that for government grants, when you have yourself taking a government grant figure to the income statement as an income, it means that your liability for the government grant is reducing. So you subtract, don't add, don't add, don't add, don't add, you subtract. But these are donations with what here? These are donations with conditions. If they're donations with conditions, you must meet those. If you don't meet conditions, they continue being liabilities because you must return back that money. I mean, many companies, many NGOs have always returned back government what year grants. Yeah. So you keep on, in this case, you're holding it as a grant in your balance sheet. When you meet the conditions, what do? You recognize it as an income. You recognize it as an income. You recognize it as an income. Okay. So, ladies and gentlemen, from there, I would want us straight away, because now we are closing our books up, I would want us to look at our operating incomes. Our operating incomes. So operating incomes, what do we have already? I have the concept of dial goods number, in this case here for food. All right, I've been able to add this, and then I have my working capital changes. Please never ever forget the tax paid. Lastly here, never forget the tax that was paid by yourself. So how do we get this tax paid? It's very easy to get tax paid. You simply take opening minus closing. Opening, you have here opening minus closing, and then you make any adjustments in the year. All right. So then what do we have here for taxation? This is an interesting one. So for taxation, these guys have given me two of them. I have deferred tax, and then I have current tax. I will not panic at all. I will not panic at all. I'm a bright guy. So in this case here, I'll come for the tax. So I'm combining openings. So openings, what do I have there? So I'm writing down, first of all, before I take this to my Excel, because I'll not be able to see this question when I'm going back to my Excel. So I can see the current tax here was 27.75. I add, that's opening. I add the deferred tax opening, 810. And then I subtract the two closings. So in this case here, we have a closing here of 26.85. Instead of putting brackets, just say minus this deferred of 1920. And then we shall come, ladies and gentlemen, and ask ourselves whether we happen to be having any tax in the year. Do we have any taxation in the year? Tax paid in the year, tax paid in the year. From the income statement, you can see, ladies and gentlemen, here that we had some income tax of 26, what here, somebody? 55. So this, of course, will not even, it's liability, and this is going to increase the liability. It's a tax paid. So in this case here, plus 26, plus 26, plus 26, 55. And you guys are brilliant. I'm so sure by the end of this, you'll become experts. By the time I do the second question, I'm so sure the first question will be having ish, but by the time I finish the second question, all of us will really be great with any cash flow statement. We should be able to get all the marks. So ladies and gentlemen, this is what we have. This is what we have here. And the tax, I'll come and say here equals. I will come and take the 27, 25. I say plus 810, plus 810. And then I say minus 26, minus 26, minus 26, 85, minus 26, 85, minus 26, 85. And then we have here minus 1920, the year that I was born, minus 1920 plus 26 plus 26, 55 or 25, I don't know, 55, like that. And then I should be able to get an answer here. It is 27.75. Let me come back to this tax. Why am I getting different figures? It is 27.75. Let me put this 75 there. 27.75. Will it make a difference? Yes, 16.35. But now remember, here you don't even have to include that minus at the beginning. You're supposed to know straight away that tax paid will always be negative. Just come and put a negative here. Put a negative. Put a negative. You can come here. Always tax paid, ladies and gentlemen, has to be what here? Has to be negative. And remember, this being a liability, don't forget the concept of multiplying this with -1. Being a liability, there is that -1 outside there, minus. It's a liability always. So this gives us minus 16 what here? 16.35. The good thing with Excel is that you can always come and make adjustments later. You can come and make adjustments later. These investing activities, investing cash flows, I'll come and say control bold, and then I'll come and add a new row here. I say control shift plus. I come up here, ladies and gentlemen, and then I'll be able to say, in this case here, the cash flow from operating activities, cash flow from operating activities. I can just consolidate everything. Don't go the way of saying before working capital changes? No, like that. And then of course, you'll be able to come here and then you'll be able to say alt equals. When you are here, you can see it is skipping things, right? So you need to come at the corner here and then you carry this thing up to the first one there. You carry it up like that. Then you say enter. So I'm getting 10,620, 10,620 like that. So interest paid, remember interest paid, we have it here. Finance cost, what do you want? Interest paid is here. Finance cost is here. Whatever you're telling me is to come and calculate this under the financing now aspect. So come here in the financing aspect, remember there are two schools of thoughts. I agree with you. You could come and put this interest here, but nowadays interest paid comes here under financing what here? Cash flows. So you'll come here under financing cash flows. I expect you to come and give me the interest that was paid here. The interest paid. We normally bring actually four things here. Interest paid. We have dividends paid. The old standard, we used to take the interest paid up there, dividend paid and operations there. And then of course we have any changes here. We have in this case here, ordinary share capital changes. Ordinary share capital changes. Ordinary share capital changes. So ladies and gentlemen, please come here. Ordinary share capital changes. Let's work on these things here. We start with the easiest. If I'm the one doing this, my easiest will be the dividends paid. Dividends paid is normally the easiest because you simply need to look at the retained earnings account. We simply need to come here and look at the retained earnings account here in Diambo. Retained earnings account. The moment you give me the retained earnings account, then I'll be able to give you straight away the interest that was done what year? The dividends, the dividends that were done what year, somebody? The dividends that were paid. Retained earnings account. The easiest really. This is the easiest working. So on retained earnings account, what do we do? Of course, it's opening minus closing. This will be opening minus closing, opening minus closing, and then we always add any profit generated in the year. You add profit after tax. So then, ladies and gentlemen, please come here very fast, and then you tell me, in this case, are you able to see the dividends? Are you able to see the retained earnings account under the equity? Are you able to see the retained earnings account under the equity? It's here. So the opening here is 25,980, 25,980 minus 28,065 plus the profit for the year. Profit for the year is here, 5535. So plus 5535. So could you kindly do this in your balance sheet, in your cash flow statement? You'll come and say equals. We have, of course, you must, because of the word paid, it'll be important just to get this right. So say minus, put brackets there. So you have here 25,980 minus 28,065, 28,065 plus we have 5535, and then you close brackets like that. So what figure are we getting, ladies and gentlemen, here? What figure are we getting, ladies and gentlemen, there for dividends? Is there somebody who is able to tell me the dividends that were paid? How much are they getting? Are they able to get that 34.50? Are they able to get that 34.50, 34.50? I can see my own raising up his hand. Let me mute this a little bit. So, ladies and gentlemen, I will repeat this very fast. Now we are doing the ordinary share capital as a mode of financing our operations. So when I look at the ordinary share capital, I can see there is a share premium coming on board. So if there is share premium, then I'm always advised to consolidate. So you take 6,000 plus 1050, you add them. Minus, you can say into brackets 7,500 plus 1350, but the best is to say 6,000 plus 1050. That's opening, share premium plus share capital. And then you say minus
this 7,500 minus 1,350. And then you ask yourself whether we have anything affecting them. Of course, you can't have anything affecting this in the income statement, nothing really. You will be given further information, of course, in the notes to the accounts. So notes to the accounts, what have they told us about share capital? Have they told us anything about share capital really? Is anybody who is able to see anything to do with share capital, or is that it in the notes to the accounts? Note number 5. During the year ended 30th April 2022, Malum Limited made a bonus issue. I love bonus issues because bonus issues in the cash flow statement, I will not pass any entry. Because when I issue a bonus, what happens? My share capital increases. But you see, because I'm not going to charge my clients for any bonus issues, for any shares issued to them, I must always recover that money from some account. So if I issue shares worth 10, I must either go to the retained earnings and deduct that amount, so that now if I had issued 10, my shares has increased by 10, then I'm again deducting this 10 from somewhere. So normally bonus shares I have got, bonus shares, ladies and gentlemen, is what we call hot air. If it was a rights issue, I would have made some adjustments. But for me, bonus issue, I will never make any adjustment. I actually not even read the whole of it. The moment I hear it's bonus issue, that is it. Let's just read it for the sake of you guys. During the year ended 30th April 2022, Malum Limited made a bonus issue of ordinary shares of 1 new share for every 10. This held utilizing the share premium account. So they're giving from this hand, or rather they're giving something to the shareholders and they are recovering some money from their share premium. So in this case, ladies and gentlemen, for this ordinary share capital, what I just need to come and do is to come here, is to come back here to my Excel. So when I'm here, I should be able to say equals, and remember equity and ordinary share capital, they are normally taken as liabilities. So start with minus. You come and open brackets. So you say 6,000, you say 6,000. This 6,000, you say plus 1050, you say plus 1050 minus 7,500, minus 7,500. And then we have here minus 1,350, minus 1,350. That is it. You close brackets. And then, of course, you can see here, we had 1,800. So it's like we issued new shares and we received 1,800. I don't have to say we issued, because when I put a minus there, I've been able to take care of whatever sign which is there. So then, ladies and gentlemen, if you are to be asked here, what have you understood from my explanation? What have you understood about this share capital? In short, what I'm asking, ladies and gentlemen, is when you go outside there, your husband, your wife knows that you have been doing a serious BDA or a serious financial reporting class, and your spouse happens to be like a doctor, a nurse, or at the very best, like what I love most, a primary school teacher. So then they ask you, my darling, what have you been studying? As regards to ordinary share capital, will you tell them that you stay away out of this, stay away out of this, stay away out of this, simply because you never understood anything? That this is not your yours to know. That's why you're a primary school teacher. Bonus issue is a hot air. That is the best thing you can tell them. Bonus issue, they have got no effect on cash flows. We shall overcome. We shall overcome. We shall overcome. There is only one thing that you guys never remembered about this ordinary share capital, that we shall always combine ordinary share capital and a share premium. You see, if you look at my working, because ordinary share capital falls under, it falls under what here? It falls under equity. It falls under, equity in the accounting equation, equity falls under, it's like a liability. So you must always remember to negate this, to put, you say minus, and then you say open brackets. You must put that minus in front. Otherwise, itakuwa international what year? Otherwise, itakuwa international disaster. Itakuwa international disaster. Otherwise, itakuwa international disaster. Otherwise, itakuwa international disaster. Great. I love this. I love this. I love this. How much interest was paid in the year? How much interest was paid in the year? How much interest was paid in the year? How do you enlarge the cells? It's very easy. It's very easy. If you want the cells to accommodate everything, what you do, if, for example, assuming that this thing, assuming that this thing was very tiny here, very tiny that I cannot be able to read everything. So what I'll do is to come and say Control A. Nope. Actually, the very best is to come here at the corner here. At the corner here, then you should be able to click there. You highlight everything. Once you've been able to highlight everything, then you should be able to come here. Anywhere in between the columns there, B, C, anywhere, and then you double click. You'll be able to open up everything like that. So the tax paid, is there somebody who can give no tax, but interest paid? Interest paid is how much? 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 Also go to the other liabilities. Other liabilities, I've been able to adjust for government grants, deferred tax, I've been able to adjust for these. I have these trade payables already taken care of, everything taken care of, other than the 10% loan notes. And the financing, I always take care of all the liabilities and the equities. So then I'll come here and talk of 10% loan notes. 10% loan notes. I'll come here and talk about 10% loan notes. And the financing activities, I'll come here and talk about 10% loan notes. So 10% loan notes, of course, here I know it will be equal. I have to begin with a negative, and then I talk over, we have opening, minus closing, plus any changes in the year, plus any changes in the year. Great. Plus any changes in the year. I close my bracket there. I come and take this black thing up. So then, ladies and gentlemen, this is what I have. This is what I have. I will come and say equals. So under 10% loan notes, under 10% loan notes, what do I have? 10% loan notes, you'll again get Saturn talking to you. You get somebody saying 8250 minus, no, it's opening minus closing. So it will be 5250 minus 8250. Do we get any financing on loan notes in this case here, this year? Oh, yes. We are told, ladies and gentlemen, here, that Maalumu Limited acquired some new plant during the year to 30th April at a cost of 1,800 from a finance company. Any arrangement was made at the date of acquisition for the liability for the plant to be settled by Maalumu Limited, issuing a par loan note. You don't even have to read nothing there. What you're supposed to know is that this 1,800 increased your 10% loan notes liability. So you need to come here, ladies and gentlemen, and do what here? You say here 5250 equals a negative first. I say open brackets there. So I say 5250. I say 5250. All right. We say minus 8250 plus. So you can see in this case here that there was some loan notes which were issued, which were worth 1,800. And then you close your brackets like that. You should be able to say enter. Now for interest paid, you look for the interest obligation, opening minus closing, plus any interest in the year. So remember, for interest paid, ladies and gentlemen, we normally say equals, because it's a liability. I will start with minus there. I will look for the opening interest obligation. I say plus closing interest obligation. not plus, but minus. It can never be plus. Minus closing there. And then I should be able to come and say plus interest for the year. Interest for the year. Interest for the year. Interest for the year. So we come here. Here we do not have any interest obligation. We don't have any interest obligation. We don't have any interest obligation in this question. There is no interest. If you look at the obligations here, there is no interest obligation. No interest obligation. So it's 0, 0. But we have interest that was paid in the year. In the income statement, we have interest which was paid in the year, which is finance cost 705. 705. So this 705, ladies and gentlemen, 705, ladies and gentlemen, is what I'll simply come and say here minus 705 because this is a cash outflow. Minus 705. Minus 705. So is there any thing you think we may have forgotten here? So this is the net, not net, but just cash flow. So cash flow from financing activities, cash flow from financing activities. So you'll come and add this. So it is alt equals enter like that. So these three, of course, you can bolden them. So bold. We have this one here is bold. We have this one here is bold. So, ladies and gentlemen, then we have here down here. Don't fear about getting any errors up there. Don't fear. Don't fear, because once you reach here, you'll have gotten so many marks. So come here and give us net cash flow. From now, all the activities, you will add the 3, you say equals, you pick this, you say plus, we have this, plus this, those 3, which now gives us 390. And then you will come and now add, you add cash and the cash equivalents, and the cash equivalents, and the cash equivalents, and the cash equivalents at the beginning, cash and cash equivalents at the beginning. Do we have any really? Let's check here. Cash and cash equivalents at the beginning. So cash and cash equivalents at the beginning, cash and cash equivalents at the beginning, cash and cash equivalents at the beginning. We have here 510. Cash and cash equivalents at the beginning, 510. So then, ladies and gentlemen, you have this 510 here. So we have 510. And then now we need to come and add the 2. We need to come and add the 2 for us to be able to get here the cash and the cash equivalents, cash and the cash equivalents, cash and the cash equivalents at the end. At the end. So you come and add these 2. You come and add these 2 alone. So in this case here we have equals. So you pick this 390, you say plus 510 like that. So it means when I go to my balance sheet, I should be able to get this 900. So control bold there. If I'm right, I should be able to get cash and cash equivalents of 900. That's the correct answer. Why can't you guys clap for me? At least for once. At least for once. At least for once. Why can't you clap for me, honestly? At least for once. At least for once. At least for once. I deserve it. I deserve it. I deserve it. So I'm so sure, ladies and gentlemen, most of you have not been able to understand so much. But when I come in my next session, when I do just one more question, all of us should be very comfortable. All of us should be very comfortable. You know, again, when it comes to financial reporting, in most cases, it's about your confidence. Your level of confidence is so important. If you're not confident, always you'll have issues. You always have issues. You always have issues. So please take that screenshot and then I take you to the next page. I take you to the next page. I take you to the next page. And then you take a screenshot again. Great. The most important thing is that you should not get out of this with nothing. Great, great. So I want to take you to the next page for those who would want to take screenshots. Yes, that should be the last one now. That should be the last one. Great.